I'm Mark Crumpton. You're watching Bloomberg Technology. Let's check first word news. Citing national security, President Trump said he reluctantly signed a $1.3 trillion spending bill today to avert a government shutdown.
While we're very disappointed in the $1.3 trillion, nobody more disappointed than me because the number is so large, it'll start coming down. We had no choice but to fund our military.
The president added he's not happy with the measure because it doesn't include protections for dreamer immigrants and doesn't provide enough money for his promised border wall. The U.S. says it looks forward to working with new Peruvian President Martin Vizcarra. He was sworn in today after Peru's Congress voted to accept the resignation of President Pedro Pablo Kuczynski. The State Department praised Peru for what it called a constitutional transfer of power. A 16-year-old girl shot this week at a Maryland high school is dead. The St. Mary's County Sheriff's Office said today Jalen Willie died last night after being taken off life support. Students from Marjorie Stoneman Douglas High School and many others around the country are in Washington ahead of Saturday's March for Our Lives. Organizers say 500,000 people are expected at the rally in support of gun control. Global news 24 hours a day, powered by more than 2,700 journalists around the world. I'm Mark Crumpton. This is Bloomberg.
And this is Bloomberg Technology. Coming up, Dropbox officially joins the big leads with the biggest tech IPO of the year. How the file sharer may have set the tone for tech listings on its first day of trading. Plus, Facebook's ongoing data scandal. Zuckerberg has spoken, but his apology didn't satisfy critics. We will hear from someone who knows just what it is like to run a massive social network. Former Twitter CEO Dick Costolo joins the show. And big tech heads to Beijing for the annual China Development Forum as the world's two largest economies brace for a trade war. First, to our lead. The market rout continues. It was a wild week for stocks, ending with a bearish reversal on the day and another steep sell-off for the worst weekly decline since January 2016. Bloomberg News stocks reporter Abigail Doolittle is in New York. Abigail, talk to us about what started and where we ended up today.
Well, Emily, in terms of the entire week, Facebook, all about Facebook. But before I go back to Facebook earlier in this week, we've been talking recently, what a day, what a week. I mean, gosh, the market's down in a big way on the day. Today, surprisingly, since in the morning we actually had stocks modestly higher, and then as the day progressed, big moves to the downside, and that has led to the worst weekly drop for the three major averages since January of 2016. And that's important because that tells us that this week was more bearish than either of those two big down weeks back in February. So the sellers are really taking control of the near-term whipsaws. But to the linchpin to this week's selling, I would have to say it was Facebook, because if you recall, in fact, if we hop into the Bloomberg and take a look at a 6-day chart of Facebook, we are going to see that this stock absolutely fell off a cliff on Monday. That, of course, was over that data crisis that you were just talking about. Investors not knowing how to what to make of it, but really reacting bearishly in terms of the overhang because of the possibility of fines or regulation. That came out as the week went on, possible FTC probe. And so that really set the tone on the week. And then we, of course, have the possibility of a trade war, so that not helping. And all of this really dragging on big tech. We had some of the big internet names trade sharply lower, including Alphabet, Netflix, and Amazon on the week, in sympathy with what's happening to Facebook. But the big drag on the week, surprisingly, Emily, at least to me in a way, a stealth decliner, Apple, down more than 7% on the week. Its worst week since April of 2016. And the reason this stands out, to my knowledge, there isn't a specific fundamental reason. So that tells you investors are selling this stock that recently put in an all-time high ahead of the earnings season. That may raise concerns about smartphone sales. So when you see this kind of selling, though, for no reason, that tells you just how jittery investors are. And of course, we see these big tech names down. And Oracle, I'd like to point out, the worst, or one of the worst drags also for the tech sector, down 14%. That's a weighting to the S&P 500. Its worst week, Emily, since 2008 on a disappointing guide, especially around the cloud.
How does a potential trade war fit into all of this, given everything that is going on with China?
So it certainly gives a bearish backdrop because it does not give the sense of, a friendly tone between China and the U.S. and, of course, what happens with technology. But specific, actually, to smartphones, very interesting over the Asian session, a number of the Asian smartphone components dropped. The companies, the stocks dropped in a big way on fears that Apple would drop those companies for some of those components. And then on the U.S. session, we saw the reverse with some of the U.S. suppliers dropping in a big way, including Skyworks, Qualcomm, Broadcom, and Qorvo. Some of those names down sharply after fears that maybe some of the Chinese phone makers might not use them. Huawei in particular, relative to Skyworks, that's about 10% of revenues. But it was also just a bad day for chip stocks overall. We had Micron trading sharply lower on a disappointing guide. So the SOX, the Philadelphia Semiconductor Index, having its worst week since 2016. Lots of bearish action, Emily. It's going to be very interesting to see what next week brings. And I love the technicals. A lot of charts are broken. It may suggest more selling is ahead.
All right, Abigail Doolittle for us in New York. Thanks so much for wrapping it all up. Meantime, the biggest tech IPO of the year so far happened today. Dropbox was priced at $21 a share and jumped on its first day of trading. Dropbox CEO Drew Houston spoke to Bloomberg about the significance of the day and the company's rapid growth.
We're growing pretty fast. So we were the fastest SaaS company in history to $1 billion run rate. And again, we focus on, we look at that 11 million number, and it's big, but we're addressing a need that every team and every company in the world has. So again, there's a lot more people that need Dropbox.
My next guest says after today's debut, Dropbox will have no problem reaching that $10 billion valuation. Vineet Jain, CEO of Ignite, a competing file-sharing startup, joins us now. And actually, they closed at about an $11 billion valuation today. So they surpassed what they had been seeking on the private markets. There was some question about whether they would. So investors are optimistic. What's your take?
If you build a solid company with good fundamentals and a lot of good cash flow, the market's going to reward you, the street's going to reward you, and Dropbox has proven that very convincingly today.
So, the question is, how many companies can really compete for the cloud, right? You have Amazon, you have Microsoft, you have Google there, you have Box and Dropbox. They're all, sort of fighting for different pieces of it. But do you think smaller companies like Dropbox need to be worried?
My opinion is, everyone is playing for different parts of the cloud pie. You talk about Amazon, you talk about Google. They're more on the core infrastructure side, less on the application side. Whereas Dropbox, or our company, for example, is focused on providing an application layer, which is your file servers to the cloud, your file shares to the cloud. And it's not a zero-sum game. The market is so large that you can create lots of multi-billion entities here. If you go back to the world of ERP, it wasn't just Oracle SAP. There was a JD Edwards, there was a Lawson, there was plenty of companies out there. And I think a similar tone is playing out today.
This is your business. Is it helpful, though, to be so optimistic?
You have to be as an entrepreneur. But also, I think Dropbox has proven today that in this market where the adoption curve is now gone from prosumers, consumers to more of businesses, and Dropbox, if you look at their valuation and their core business, it's prosumers, consumers. Whereas a company like ourselves is focused on the SMB market, the mid-market class of companies, which is a huge swath within North America, even if I don't talk about Europe and other parts of the world.
What about Apple? I mean, you could think of Apple and iCloud perhaps as an even bigger threat to a company like Dropbox, given that it is so consumer-focused and that really is Dropbox's bread and butter.
It's a very interesting point you make, and I maintain that they're a dark horse. If you think about it, 64% of Americans each has at least one Apple device. And most of them have a built-in iCloud drive. If Apple were to get serious about going beyond the simple functionality of the given cloud or in iCloud and add more and more things of what people are looking for, it could actually be a substantial threat. But it remains to be seen what the core focus will be.
So, as somebody in this industry, what do you think are the biggest challenges ahead? What do you worry about, when it comes to your own business, given how much everybody is fighting for this territory, even though it is expanding?
The big driver for our space has been, and Dropbox success has proven that, other companies are proving that the cloud reduces the friction. People want the ease of use. But now there's a bigger focus on privacy and data security. And my opinion is it's not just relevant for consumer brands or social networks. It's actually true for every tech company that's providing any kind of solution. So inordinate focus on data privacy and ask being placed on security, provide an industrial grade solution, I think that's a big challenging thing that companies will struggle. Or if they don't have the focus, they'll have to try to build.
Privacy has been a top topic this week, especially given what's going on with Facebook. You know, do you think that our data is at risk, our privacy is at risk, even when companies promise that it's not?
You know, it's a hard question to answer in a very binary way. It totally depends on what target market you're serving and what exactly are you doing with their data. So in our case, for example, your companies are entrusting us with their file servers, their core content, which is their core IP, and protecting that, making sure privacy, compliance issues, GDPR in Europe, all of those are addressed, are such bread and butter that if you create any little tremor, you'll take a significant hit as a company. So the level of seriousness goes with what target market you're trying to serve. That's, in my opinion, the way to look at this problem.
All right, Vineet Jain, CEO of Ignite, thank you so much for joining us. Coming up, former Twitter CEO Dick Costolo weighs in on Facebook's crisis of trust. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. A troubling status update for Facebook via tweets from Elon Musk. Musk said he is deleting the Facebook pages of SpaceX and Tesla. Musk, who was responding to a tweet from a follower, says he didn't even realize SpaceX had a Facebook page. Both SpaceX and Tesla's Facebook pages are now no longer available. And as the fallout continues in the wake of the exploitation of data on millions of Facebook users, I caught up with former Twitter CEO Dick Costolo and asked him to weigh in on the controversy.
One of the concerns I have or questions I have is the impact it's going to have on the way people think about APIs and access to data in the future. Obviously, Facebook had built out this platform approach that enabled third parties to access this data and use them to interact with and engage with people on Facebook, and then turned that off some years ago now, and are now sort of seeing the consequences of some of that. I do think it will have an impact on the way technologists and company founders and CEOs going forward think about how that data will be used, how they can audit, how that data is disposed of, et cetera.
How does Facebook use data in a way that's different than the way Twitter handles data? Because as I understand it, Twitter is more protective of user data, though Twitter, of course, has its own issues, which we can talk about. But do you think Facebook has been too permissive and too careless about user data? You know,
just to be not to be an apologist for what's been going on, but this platform was public. Those APIs were public. People knew what those APIs were capable of, and they've been long disabled. The big difference between Twitter and Facebook is that on Facebook, there's lots and lots of personally identifiable information and demographic information. That turns out to be particularly helpful to advertisers. Advertisers want to be able to demographically target and micro-target, and Twitter doesn't have a lot of that information. To just go back a few years, and when I was running Twitter, frequently that was thought of as a disadvantage. Twitter doesn't know anything or enough about its users, so I can't target my advertisements as accurately as I can on Twitter, on Facebook rather. So there are two sides to this coin. In some instances, it's a real benefit to the platform's business, and in other areas like we're seeing now, it comes back to haunt you.
We're seeing former Facebookers increasingly speak out about Facebook. WhatsApp co-founder Brian Acton tweeted #DeleteFacebook. This is a guy who sold his company to Facebook for $20 billion. Do you think Delete Facebook will take off? Do you think this will have a significant impact on users' desirability to use the platform?
I'm sure these people will be returning all their ill-gotten gains any moment now. I don't think this is. These things happen. They come up every now and then when there's a big news event around these platforms. Facebook is such an important part of a lot of people's lives that it may be the case that a certain number of people here in Silicon Valley, inside the bubble, if you will delete it. I don't think it will be a big movement. It's too much. It's too important a part of too many people's lives around the world.
Is it disingenuous for people who made a lot of money on Facebook to now?
I already made a joke about that. Come on.
So you think it is? You think it is?
Well, I just think that it's easy, or it's easier certainly when you're not a part of the company anymore to sort of sit back and lob in, Molotov cocktails. There are people working extremely hard inside these companies to do the right thing. I know Ed Ho, who leads product at Twitter, has been talking a lot about the issues, along with Jack, the issues Twitter is trying to deal with in this regard on the platform. So there are people inside these companies trying to do the right thing, and I tend to not love it when people can sit on the sidelines and sort of lob in criticisms to them.
Mark Zuckerberg said in an interview that perhaps tech should be regulated. It's not a question of if, but how. Do you think tech should be regulated, and if so, how?
I think it probably will. There will end up being regulations here. It sort of seems like that's that tide is headed in our direction, is incoming, if you will. The challenge, particularly around in areas of technology, is it tends to be frequently areas and concepts and details that are difficult to understand, which make them very susceptible to lobbying. And there are lobbyists on all sides of these equations. So, and then finally, I worry that in most cases, the regulations start to fight the last war, right? Well, in the past, this happened, so let's prevent that from happening again. And the technologies are changing so quickly, they don't anticipate the next issue or challenge that may be coming up. And they they cause these companies work and maybe aren't addressing what the companies have to deal with and what society has to deal with next.
On that note, Zuck also said he's sure that version 2 of Russian meddling is happening on the platform. If he's sure it's happening on Facebook, it's probably happening on Twitter as well. Can Facebook and Twitter actually stay ahead of this? Now that they know that it happens, can they really keep up?
It's an arms race. Like spam was in the past, like phishing and these other kinds of challenges were in the past. The difference now is that there are state actors involved on the other side, not just a few people trying to hack into an account. And when you've got state actors who have enormous amounts of resources, it's going to be a real battle keeping up with them and going after their new attack vectors. They're never going to attack the same way they attacked in the past. They'll try new and different tactics, and keeping up with that is going to be a real challenge for these platforms.
Just some of my conversation there with former Twitter CEO Dick Costolo. You can catch the rest online. Coming up, a trade war with China could have major ramifications for U.S. tech. And now, Apple, Microsoft, and Alphabet's top execs are heading to Beijing for the China Development Forum. We will discuss. This is Bloomberg. As a possible trade war with China looms, some of America's top tech leaders are heading to China. Their mission? To do more business in the world's most populous nation. Apple's Tim Cook, Google's Sundar Pichai, and IBM's Ginni Rometty are all attending the annual China Development Forum this weekend. Cook is co-chairing the event, and his company Apple has the most at stake in China from U.S. companies, that is. Here to tell us why, Bloomberg Tech's Mark Gurman, who covers Apple for us, of course. So what do you make of this big pilgrimage to China?
It's actually incredible. I mean, the timing. They've had issues in China before. Apple, that is. These other companies, Google, as we know, is banned from many parts of Greater China in terms of its web services. IBM, issues there too. Qualcomm, of course. they're trying to acquire NXP here, and China needs to sign off on that deal, and there's some problems there. So these 4 companies in attendance from the U.S. couldn't have more at stake. Apple, when Tim Cook became CEO, he seriously reprioritized China on Apple's map, and there was huge success for Apple in China through 2015, but it's sort of, like a roller coaster, is now just going downwards right now in China. Sales have fallen for many consecutive quarters in China, so they have a lot of stake there. At the same time, they have this iCloud issue that's been emerging over the past few weeks or so. There's a new law in China where companies have to store their customers' data on state-run servers in mainland China versus servers in Europe or the United States. So basically now, ironically, Apple users will have China users of iCloud in China will have to store their data locally.
It's interesting timing given the tariffs that, the U.S. is putting on China and China's response to those tariffs. Do we know yet any more about how those will affect companies like Apple?
Now, of course, that is the biggest thing. Thank you for throwing that out there for me. Apple, we don't know yet, because like Trump, announces these things and then says he's going to veto them and then doesn't veto them and then says that there's going to be an announcement. We don't know the exact details yet, but we've sort of broken down the what ifs. One possibility is that China, or that Trump would consider Apple an American company and not tax them on phones flown from Foxconn in China to the U.S. There's also the possibility that he might do that sort of in retaliation for Tim Cook not moving iPhone manufacturing to the U.S., as Trump has been asking for many years, right? So if he goes in that direction, then you have to look at the steel and the aluminum, or the steel and the other metals that are under this Trump law in the iPhone, break it down. We spoke to Gene Munster, as you know, well-known Apple analyst, and he said even if it goes that far, the impact will still be very little. It won't really hurt Apple's bottom line.
Speaking of, next week, Apple will be having a big event focused on education in Chicago. I know you've been trying to find out as much as possible about this event. We talked about it a little bit earlier this week. What do we know?
So what we reported this morning is that the event is going to focus around a new iPad, a lower cost, cheaper model geared towards education. In addition, Apple will have new education software for students and teachers alike. Now, Google has really made inroads in the education market with their Chromebooks, as well as this service called Google Classroom. Google Classroom is a very integrated service where kids can do their homework, submit it to teachers, take tests, get graded. Chromebooks have 59%, according to the latest data, of the education K-12 tech market, whereas Apple only has 17%. So the iPads are designed to boost that 17%, that lower cost education geared tablet, while the software that Apple's working on is going to be sort of a more integrated approach. Right now they have so many different education apps. They have Swift Playgrounds for coding, they have the Classroom app for teachers, they have this new ClassKit framework that they're working on for developers, and they have iTunes U for classwork and watching videos of different past lessons, and now they're going to integrate that all.
Well, I know you will be all over that for us. We'll have full coverage next week. Mark Gurman, our Bloomberg tech reporter who covers Apple, as always, thanks so much.
Thank you.
Coming up, Sequoia Capital started with a $1.2 million investment in Dropbox more than a decade ago. How much is that stake worth today? After the IPO, we'll speak to partner Brian Schreier next. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. President Trump has tweeted that the Justice Department will issue a rule banning bump stocks, the devices that allow semi-automatic rifles to mimic fully automatic weapons. The Justice Department also announced criminal charges and sanctions against Iranians accused in a government-sponsored hacking scheme.
This indictment alleges that the defendants worked on behalf of the Iranian government, specifically the Islamic Revolutionary Guard Corps. They hacked the computer systems of approximately 320 universities in 22 countries. 144 of the university victims are American universities.
Justice officials added the hackers were affiliated with an Iranian company called the Mabna Institute, which prosecutors say contracted since at least 2013 with the Iranian government to steal scientific research from other countries. Islamic State has claimed responsibility for an incident in southern France where an armed man took hostages in a supermarket and killed 3 people and wounded 16 others. The suspect was killed by police. The French President Emmanuel Macron praised a police officer who was seriously wounded after offering himself up in a hostage swap. European Council President Donald Tusk says EU nations will take more steps against Moscow following this month's nerve agent attack in the UK.
In these difficult circumstances, I am personally especially pleased that despite the tough Brexit negotiations, the European Union has demonstrated unanimous and unequivocal unity with the UK in the face of this attack.
The EU says it's highly likely that Russia was behind the March 4th attack on a former Russian spy and his daughter. Both remain hospitalized in critical condition. Meantime, Tusk confirmed the 28-nation group will recall its ambassador from Moscow for consultations. The Associated Press cites a UN official who says the world body will not provide any electoral assistance for Venezuela's upcoming presidential vote. The election's being denounced as rigged by opposition leaders in several foreign governments, and Venezuela's main opposition coalition is boycotting the election. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In New York, I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. Back to our top story. Dropbox soared in its public trading debut, jumping 35% on its first day of trading. That is paying off handsomely for Sequoia Capital, one of Dropbox's earliest investors. What started with a $1.2 million investment made over a decade ago is a stake now worth roughly $2 billion today. Bloomberg's Alex Barinka caught up with Brian Schreier, partner at Sequoia Capital at the NASDAQ on Friday. Take a listen.
We first met Drew Narash when Dropbox was just an idea, and two tremendous founders with a product vision. And fast forward to today, you have a billion-dollar company built by some of the finest people I think you could ever hope to work with. So it's been a great privilege for us to be involved.
And you've seen kind of the life cycle in the past 10 years. They did take some times where they refocused the business, where they cut costs, where they kind of got it into the shape that, frankly, public market investors were really excited to see from a cost structure perspective. What takeaways do you share with your other portfolio companies with what Dropbox did in terms of refining its business strategy?
It's been a decade in the making. And so one of the unique things about Dropbox is they architected both an incredible business model and a wonderful product from the early days, but they've built something of tremendous scale. So Dropbox stores over 400 billion pieces of content. And so that has taken a lot of financial investment over the years, but that investment has paid off in a company that's been cash flow positive for a couple of years.
Not all companies exit. IPOs are what? We get 20, 30 a year from the tech sector here in the U.S., and there are a lot more private startups out there that have valuations in the billions. What specifically about Dropbox do you think made it a company that could actually get public?
Dropbox combines the best of both worlds, and what I mean by that is they have the strength of a consumer company, which is scale and virality of adoption, but they also have this recurring business model of a software company. There really isn't another business out there like it. The other elements are that it was both a great business from the beginning in addition to a great product, which is a hard thing to do. You know, if you were to partner with one or two companies a year, as we do at Sequoia as an individual investor, it's a once-a-decade thing to find two people like this who can pair both business and product.
What are you telling those other CEOs that you work with when you point to Dropbox? What are you telling them to take away from this narrative?
I think that Dropbox is a model of a long-term orientation to building a business. So Dropbox did announce a year ago that they're the fastest company in the SaaS space to achieve $1 billion in revenue, but it's taken a lot of time. And that means making the right decisions every step along the way. I think number one is building a world-class team. And for Dropbox, a world-class team means people who are the best in the world of their jobs, of course, but it also means finding people of tremendous character. And so the character of Dropbox starts with Drew and Arash, and then hire number 1 all the way up to Dropbox for number 2,000 today. And that's why it's been such a great privilege to work with them.
When I think back to 2015, when, say, Square listed, there was a lot of kerfuffle about the fact that it was going public at a valuation well under the private valuation. Talking to people these last 3 years in the IPO and the Silicon Valley worlds, it seems like some of that concern about a valuation haircut has been taken off the table. Dropbox price just under, it's now trading through above its private valuation. When you think about this valuation question, yes, it doesn't impact business strategy, but it does impact morale and potentially customer relationships or fundraising. How have things changed in terms of how people think about the change in valuation at IPO?
Well, at Dropbox, we've always focused investors, employees, anyone around the company on the very long term. And we felt that if we were building a service of value for 500 million people and over 10 million paying customers, that we would weather any ups and downs in the market. And I think what we've seen today is that despite a week of tremendous volatility in the public stock markets, a company that is built to last can just punch through all of that.
You're an early stage guy. You look at the companies when they are young, like when you got involved with Dropbox. Where else are you looking these days? You've got a pretty nice stake here, upwards of, $2 billion at the IPO price and trading higher. Where is Sequoia looking to put its money these days?
For Sequoia, there are tremendous number of opportunities today. In fact, in the last couple of years, we've invested in everything from rockets to data science to social media. But the honest answer and the secret of venture capital is that we're looking for the next Drew and Arash. It's those founders that make the difference, and they're so hard to find.
And Drew and Arash, when do you look for that female pair of founders? How has your investment thesis changed given kind of the real impact that some of the strong female voices have had talking about some of the systemic sexism in the Silicon Valley industry?
Oh, it's changing, and I think for the better. We have a long way to go across the industry. Actually, the last 2 founders that I've backed are female founders, so I'm glad you asked. And I think things are getting better, but we have a long way to go.
When you think about exit strategy here for Sequoia's portfolio companies, where are your thoughts these days? The market has run up. We have seen a little bit of a rout in tech stocks in the public markets, but it's been a long time bull market generally. Are things getting frothy? Is now the time to push your companies to exit? How do you think about your exit strategy?
Well, our strategy at Sequoia is actually to be the idea partner to the IPO partner to beyond. And so we don't actually optimize for exits. And that's one of the ways that we think differently from other investors. We believe the exits will come if you're building enduring value, because that is what's attractive to acquirers or public market investors.
Brian Schreier there, partner at Sequoia Capital, with our very own Alex Barinka. Well, believe it or not, there is some other non-Dropbox IPO news. Over in Hong Kong, Tencent-backed Meituan is said to be seeking a $60 billion valuation as it mulls going public as early as this year, rivaling the size of Uber. The Chinese food reviews and delivery giant is currently the world's 4th most valuable startup with a current valuation of $30 billion. Coming up, messaging service Telegram made a big bet selling a new cryptocurrency this year, and it seems to be paying off to the tune of $1.7 billion. We will explain next. This is Bloomberg. Qualcomm investors re-elected the chipmaker's board at a shareholder meeting that would have been dramatically different had the largest proposed acquisition in tech history not been stopped. 10 directors, including CEO Steve Mollenkopf, were elected unopposed. The chipmaker is still battling with regulators and Apple over licensing after the failed bid from Broadcom. Messaging service Telegram is on a roll. The WhatsApp rival has now hit 200 million users and is on track to raise another $850 million via its initial coin offering. So what is the grand plan of its self-exiled Russian founder? Bloomberg's Caroline Hyde joins us now with more in London. So first of all, Caroline, walk us through the size of Telegram relative to other messaging apps out there like WhatsApp, like Facebook Messenger, and the use case, because there's a very specific reason that people want to use Telegram.
Yeah, they've always boasted encryption before the rest of them got there. Since they were born in 2013, they had end-to-end encryption before the likes of WhatsApp, but it's still a minnow when you look at the actual size. 200 million sounds like a lot of users, and it is, but it's still got to scale by some 7 times to be at the size of WhatsApp. It's got to grow 6 times to get to where Facebook's Messenger is, and it's got to grow 5 times to get where WeChat is. So it's got a lot of growth in terms of user base to do, but it's also got huge plans to diversify into actually building its own blockchain protocol, its own blockchain network. It wants to rival the likes of the Ethereum protocol, the likes of Bitcoin. It's going to offer payments, Emily. It's going to have a digital wallet. It's even going to offer storage like the likes of Dropbox does. It's going to have ways in which you can purchase things via the protocol. You can have online sort of storage if you want to be an entrepreneur. You can have a virtual storefront. Therefore, of course, they've got to have a currency. It's got to be a cryptocurrency, and the cryptocurrency is Gram. All of this is going to be done by 2019. Many are pretty skeptical.
So they've already had a record-breaking ICO, but now they want more money. How do they do that?
Yeah, $850 million, not enough, apparently. That was raised in a pre-sale to venture capitalists, the likes of Sequoia. Kleiner Perkins got in on that one. Interestingly, the main players in ICOs and in crypto, the likes of Union Square Ventures and Andreessen Horowitz, aren't in it. So many raise an eyebrow at that because they usually know their stuff. But they did a pre-sale, they got $850 million, and now they're doing another pre-sale, this time to big players in terms of wealthy individuals, accredited investors. They've got going for $850 million on. Then they'll go to the public market to go and raise the other $850 million that they want to get. In tune, they're going to raise about $2.2 billion, all to grow out this blockchain protocol that they want to build overall. But there is some skepticism, as I say, whether they can actually drive for the efficiencies they claim to want. They want to have a more efficient protocol than Ethereum and Bitcoin. They want to be able to have faster transactions, get this about 1 million transactions every second. Well, at the moment, you can get 7 to 15 transactions per second on the likes of Ethereum. They don't really outline in their white paper how they would achieve this. So there is some skepticism, but certainly they are going for record-breaking numbers, and already they have broken records with their first ICO.
Meantime, there is an update on the Facebook Cambridge Analytica story. The company now undergoing a third-party audit. Tell us a little bit more about the action that's being taken.
Yeah, let's bring it closer to the home, because actually we remember Cambridge Analytica is a UK-based company, and therefore the main watchdog in the UK has been driving on behalf of the EU the probe, the investigation into Cambridge Analytica, but it's been stunted in doing this so far because it couldn't get a warrant from a judge. Now finally they've got that warrant, we understand. This is the Information Commission Office in the United Kingdom, as I say, the main regulator, the main privacy watchdog here, and they have finally got the all clear to go into the office, to go into the computers of Cambridge Analytica, to actually get to grips with whether they have the data of 50 million US citizens that they managed to somehow take from Facebook. Of course, all of this is alleged. Cambridge Analytica have said, no, we deleted that back in 2015 when we were asked to by Facebook. But still, many don't believe that. Many feel that the data is on their computers. And this is what the regulator is now going to go and find out. I tell you that the CEO we know, of course, Alexander Nix, was suspended earlier this week after he was caught on secret videotape of bragging of some of the dodgy campaign tactics that they tend to use with Cambridge Analytica. So he's been suspended. But overall, we now have to see how they deal with an independent third-party audit that they're also taking on to try and prove that they don't have this data. Emily.
Okay. Bloomberg's Caroline Hyde in London for us. Thank you so much, Caroline. Coming up, with each passing day, Facebook is having to answer about its role in and obligation to society. Up next, we will hear from one of its earliest employees and co-founders. This is Bloomberg. Returning to our coverage of the Facebook fallout, Facebook CEO Mark Zuckerberg broke his silence on the crisis over Cambridge Analytica's access to user data, outlining concrete steps that the company is taking to make sure such a leak doesn't happen again. One early Facebook insider is Chris Hughes, who was not only Zuckerberg's college roommate, but also a co-founder of the social network. We spoke to Hughes back in February on my long-form show, Bloomberg Studio 1.0, and asked him about Facebook's responsibility in influencing politics and society. Take a listen.
In particular, has been really clear about Facebook's responsibility in the 2016 election and has taken stock of his own responsibility to think about how Facebook influences our politics and our culture, and the recent changes with the newsfeed and some of the other things that they're doing are a reflection of that. I have no idea if that will be enough, and I, can't say whether or not Facebook will be able to prevent Russian meddling in this election. I certainly hope that they can, and I think they have a very deep and real responsibility to do so. But the first step is understanding that that responsibility exists, and I think, at least in Facebook's case, there's an embrace of that, and it makes me hopeful. I just hope that we see something similar across the board with the other companies and on the economic issues, which I think are just as urgent, even if they aren't grabbing quite as many headlines.
You were critical in the early days to launching the homepage that became the newsfeed, and now today, the focus really is the news feed, and Facebook has said we're going to show you less news and more posts from friends and family. Before we go there, just take me back a little bit and talk to me about launching newsfeed and what your role was and how you sort of take stock of what it's become.
I mean, the very first Facebook homepage, I was about to say people forget, but the vast majority of people never saw it. It was just a static, you have X number of many messages, here's your little profile photo. It was very, let's say, bland, boring. And we launched Newsfeed in the fall of 2006. And it really revolutionized the platform. It made it much easier for people to stay up to date with what their friends or family were doing, and it stayed, the core of the product, if you will, through today. So I think that Newsfeed is best. I speak as one of the billions, literally, of Facebook users when it's engaging and not just entertaining, but delivers you important news and information that you want. When you find out a friend got engaged or another friend had a child, those kind of life events are important to have, not only those, but in addition to everything else. And so I think that kind of view of a valuable product is what the Facebook folks want to get back to now, which seems to me to be like a move in the right direction.
In a way, it's almost as if Facebook is taking a moral stand here, and in a way that it could help the business or it could hurt the business, depending on how you evaluate what's good for the business. It's interesting territory for Facebook to be navigating.
Yeah, I don't know. I read the same headlines that you read and the same pieces and don't, it's been a long time since, in fact, over a decade since I've worked on the product team there. But I do think that there's a sense, not just at Facebook, but at Twitter too, at all the social companies and platforms, that these things work best when they're meaningful. And there's a bit of a difference between just being entertaining and being meaningful, and making sure that when you spend time inside the products, you're feeling a sense of connection, because ultimately that's what the platform was intended and what it was about. I think that's important to them now, and quite frankly, back in the beginning was an important driving value then too.
So do these companies have a moral obligation?
I think that they have an obligation to understand the role that they have in society and what they're doing to impact it. So if we take our politics, for instance, I don't know if I'd call it immoral, but I definitely think that they recognize an obligation to make sure that people are listening to other people who disagree with them.
That's from our upcoming Studio 1.0 interview with Facebook co-founder Chris Hughes. And finally, virtual reality was supposed to be the next big thing, but it hasn't happened yet. But Oculus is trying to change that with its new headset, the Oculus Go. Bloomberg Tech's Mark Gurman got a first-hand look.
Virtual reality. It was supposed to be the new way to look at the world, but it's yet to take off the way Hollywood told us it would. But Oculus, a division of Facebook, is trying to change that. Their plan, the Oculus Go. It's a new strategy. It's cheaper and a different approach to VR. Unlike headsets from HTC, Sony, and even Oculus's high-end Rift headset range, the Go is a completely standalone device. It doesn't need to be chained to a powerful desktop or laptop Windows PC. It has a smartphone chip and a rechargeable battery, so it can be used similar to a phone, tablet, or even something like an iPod Touch. You can watch movies on the go, play games, and interact with immersive social media apps. According to the latest data, Oculus has 20% ownership of the VR headset market. That trails 40% ownership by Sony's PlayStation VR system. That gives Oculus a lot of room for growth. But at the same time, VR has also been referred to by many as a platform that will soon be supplanted by AR, augmented reality, basically a cousin of VR that mixes the real world with the virtual world. Tech pioneers like Amazon and Apple are focusing on AR, seemingly not believing in VR as a winning long-term strategy. So, while the Oculus Go might be a hit product this year and next, it could also be a short-lived success story. We'll find out soon.
That was our very own Mark Gurman. And that does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Check us out at Technology Weekdays, 5 p.m. New York, 2 p.m. San Francisco. That is all for now. This is Bloomberg. Have a wonderful weekend.